We've got something to talk about, and it's your whack credit, or the fact that you're an adult with no credit. Hey friends, what's up? Welcome back to my channel. I don't blame you. I'm not mad at you. I'll let this one slide simply because they don't talk about credit in school. And if you grew up before the 2000s, honestly, a lot of people did not trust financial institutions, nor did they trust banks. They didn't trust anybody lending money. They didn't trust credit cards. I don't know, ask your parents and your grandparents, and you'd be surprised how many people will tell you they didn't trust putting their money into banks, nor did they trust getting loans. That's not everybody. That is just a common thing that was back in the day. But today's generation is all about financial freedom, generational wealth, credit, buying a house, buying investment properties, and all types of wonderful stuff that's going to advance them and elevate them. So I'm here to talk to you guys today about that one thing that literally rules the world, unfortunately, and it's your credit. Now, what is a credit score? Basically, it's a score made up from a scale of 300 to 850 on a FICO range. And I will mention that when you are looking for your credit score, you want to be looking for a FICO score and not a Vantage score. Most financial institutions, if you are going to receive some type of funding, credit card, loan, car, house, mortgage, whatever, are going to be doing a check on your FICO score, not your Vantage score. And you're probably wondering, well, when will I encounter the two different ones? Here's where everybody makes a mistake. You're going to say, oh my God, I want to check my credit score. And then you're going to know of that free app that lets you check your credit score. And we all know what I'm talking about. And that's Credit Karma. Credit Karma is not wrong. However, they're not all the way accurate. It's kind of like telling some of the truth. And that is because Credit Karma uses your Vantage score. Now, your Vantage score is not wrong, like I said. However, it's just not as deep of a pull as the FICO score, which is what the lenders are going to do when you're going to apply for that mortgage for that house. They are going to be looking at your FICO score, which is a deeper credit report that is showing them all of the good stuff that they need to see, all of the dirt on you. And they are pulling it from 3 of the major credit bureaus, and that will be Experian, Equifax, and TransUnion. These are just companies that have basically stockpiled all of the dirt on you that has to do with different things, and I'm going to explain that to you right now. Your credit score or your credit report is made up of 5 factors, and that would be 35% of it is your payment history. Now, why is payment history the biggest chunk? Why is it so important? That is because credit bureaus or financial institutions, if they are running you to see if they can give you some of their money, they want to trust you. They want to see how you've done in the past with other people's money. So they are going to check your history. This is solely just to see how responsible you're going to be with their money. Because don't get it twisted, y'all. Any money that is loaned to you or that is credited to you, you have to pay it back. And your payment history is going to be from the beginning of time, aka since you were 18 and you can start building credit, up until your very present day. And it is going to include everything, honey, everything. Next is 30% of your credit score is made up of your credit utilization. This is the part that really, really hurts people, is your credit utilization is way too high. And a lot of times this starts when you're young. Granted, there are adults who still make these mistakes too, but a lot of times, as soon as you turn 18, you went shopping, and now you've got that big name retail store credit card who convinced you at checkout that you'd get an extra 30% off your purchase today if you signed up for their credit card. And you did that how many times now? Now you have so many credit cards from retail stores, which are like the worst credit cards to get. They're maxed out, and you haven't been able to pay them down because the amount is just overwhelming at this point. This is what we want to avoid. So if you have no credit or if you have bad credit, this part is super important because you either want to avoid that. If you have no credit, do not fall into the trap of getting all those credit cards, maxing them out, and not being able to afford it. Or if you've already gone down this rabbit hole, you want to start chipping away at that. You need to start paying it down. It doesn't matter if you're only paying the minimum. You just need to start paying that down. You need your credit utilization to be under 30%, honey. Under 30% is where you will have the best standing and the best recognition with your credit bureau. Anything more than that, they're gonna look at you like, all right, now you get a little beside yourself spending all this money like that you can't afford. So if you need to every month maybe make 2 payments or pay the balance in full, it will help bring your credit utilization down, and I can guarantee you, you will see an immediate increase in your score. The next big factor that plays into your credit score or your credit report is going to be 15% of that is the age of your credit. Now, what do I mean by the age? Yes, I literally mean from when you first started building credit up until now. That entire time frame is very, very important to lenders. It is important because they want to see how you've been doing from then until now. If you've got a steady track record of no missed payments, no late payments, then they're going to be very, very pleased with you and they're going to want to lend to you. However, this also shows something that's very important, and you may or may not have heard this before, but a lot of people will say, do not close a credit account. And that is so, so true. Soon as you pay off that credit card that you maxed out, you're probably going to be like, oh my God, I never want to see this card again. I paid it off and I'm going to close it. Do not do this. Do not close your credit card. Just cut it up, put it away, freeze it. I don't care what you do with it. Don't close the account. You want this account to stay open, because if this was that first credit card you got as soon as you were 18 and now you're 25, you just lost 7 years of credit history if you close it. And now the age of your credit is going to be significantly shorter. It's going to look like you didn't start building credit until you were 25. If you got rid of the credit card that was building your credit since you were 18. Hope that makes sense. Don't close off your credit cards. Don't close off your credit accounts. Usually when an account is closed in good standing, don't do it unless you absolutely have to. But let's say you were financing furniture and you finally paid it off. Now your account will show good standing that you successfully completed a payment program, and that's a little different. It doesn't hurt your credit as bad. But just try to avoid closing too many credit accounts because it will reduce the age of your credit history. Next, 10% of your credit score is made up by the types of credit that you have. What do I mean? I mean your student loans. Yep, those are in there. Your credit cards are obviously in there. Your personal loans, your mortgages, just different types of loans that you have are all making up that credit score. That would also include like your car note, any utilities like a phone bill or things like that. Those are all playing into factor of your credit score. Now, there are some of those that are more favorable types of credit, which would be like a mortgage. If you have a very large mortgage in great standing, then that shows that you have so much responsibility in your life that credit bureaus can trust you and they can lend you more. If you have collections on your credit report, well, that's still a type of credit, but it's not necessarily a good one. That shows that you don't know how to pay people back. And the last 10% of your credit score that everybody hates is your inquiries. How many inquiries do you have? Did I just say inquiries and inquiries? I just said it 2 different ways, like caramel and caramel. Let's not talk about it. These are very important because you don't want to have too many. Now, if you happen to get a house and then, 6 months later you decided to get a new car, okay, fine, that's okay. But if you were out trying to finance new furniture and one big name bank didn't approve you, so you went to the next big name bank and they didn't approve you, went to the next big name bank and they didn't approve you, you didn't get approved to the 4th time, which I doubt you're going to get approved on that 4th time if you just had your credit score ran 3 times before that. All of those inquiries showing up in a short period of time can negatively affect you. It's okay if you have a healthy amount of inquiries throughout your credit history, but if you have consecutive pulls, hard pulls, not soft pulls, back to back to back to back, that does hurt your credit. Also make sure that you are very clear on what a soft pull and a hard pull are when you are going to talk about credit with somebody. So if you're going to XYZ jewelry store and you want to get a credit card with them and they say, let's see if you get pre-approved, make sure that their pre-approval is only a soft pull. A soft pull does not leave a derogatory mark on your credit report like a hard pull will. A hard pull can drop your score about 2 to 3 points. It's not much, and it's not much to worry about too much. Again, if it is a healthy amount of inquiries over a long period of time. But if you keep getting pulled 1, 2, 3, 4 times within the same week, your score is going to drop about 10 to 20 points. And also keep in mind that inquiries typically take 2 years to come off. So you're stuck with those inquiries for the next 2 years. Obviously, you can break down all 5 of these categories so much more and really dive deep into why your credit score is what it is, how they got that number, and why you either can or cannot live a luxurious life. But I hope that helped to give just a little bit of insight as to what a credit score and a credit report is. And these things are so important because literally you can't do anything without them. And that includes getting a new car, getting a loan, getting an apartment, getting a house, even getting a job. Some people do run your credit to see if they will hire you. I know. But do not feel that if you have bad credit or no credit that you're automatically counted out, because it is possible to repair your credit or to start building your credit. And it's never too late to either start building it or to start fixing it. But unfortunately, these 3 numbers are going to follow you for the rest of your life and determine pretty much if you can have whatever you want. It does not matter if you're sitting on thousands of dollars and you go, well, I can give you a bigger down payment or bigger security deposit. Will that veto my credit? Not necessarily. Let me tell you why. Because even if you have all this money, but you have a track record of not being good with paying people monthly, then it still shows them, I'm probably not going to take your money, because once we make this deal, from today on, you're probably not going to be very good with paying me the rest. For example, you apply for an apartment, your credit's not great, so you guys agree on a much larger security deposit in exchange for the bad credit just being ignored. However, most apartments are not going to accept this because, yes, you have the funds right now, but a few months from now, will you still have the funds and will you still be making on-time payments? Because according to your credit report, you're not the type of person who makes on-time payments or payments at all. According to this eviction and these collections, I don't think I can trust you. So unfortunately, we're not going to be able to lend to you. We're not going to be able to get you an apartment. We're not going to be able to get you this car. It's pretty frustrating and it can be pretty sad, but it's not the end of the world. Like I said, you can fix it and you can start building it. So let me know if this video helped you in any way with understanding what exactly those stupid credit reports and stupid credit scores are. And if you have any more questions about them, please leave them in the comments or let me know on my Instagram. Make sure you guys follow me at Your Realtor Raven, and I'll see you next time.